New dates and new amounts have been released, and many seniors across the United States are hearing the same question again and again. Did a new Social Security bill really get approved? And what does it mean for your monthly payment, your benefits, and your financial security going forward? Today's update is important because it addresses confusion, concern, and real expectations for millions of older Americans who depend on Social Security, supplemental security income, Social Security disability insurance, and retirement benefits to cover everyday life. If you are retired, disabled, nearing retirement, or helping an older family member manage benefits, this information matters to you. Social Security is not just another government program. For many households, it is the main source of income that pays for rent, food, medicine, utilities, and basic dignity. Any change in dates, any adjustment in amounts, and any new law or proposal can have a direct impact on how secure you feel month to month. Social Security was established in the 1930s to provide a safety net for older Americans, and it has evolved over the decades to include disability and survivor benefits. Today, it serves as a critical lifeline for nearly 1 in 5 Americans, representing a cornerstone of retirement planning for workers across the country. Any proposed changes to such a fundamental program naturally generate significant attention and anxiety, which is why separating fact from fiction is essential. There has been a lot of talk recently about new legislative proposals connected to Social Security. Some headlines make it sound like checks are suddenly increasing overnight, while others create fear that benefits could be cut or delayed. The truth, as always, sits in the middle. That is why this discussion is focused on clarity, not panic, and facts, not rumors. Before we go further, take a moment to ensure you are staying informed through reliable sources. These updates change quickly, and staying informed can protect your income and help you avoid costly mistakes or missed opportunities. Now, let's slow everything down and explain what is actually happening step by step in simple and clear language. First, it is important to understand how Social Security changes usually work. Social Security payments do not change randomly. Any increase, adjustment, or timing shift comes from legislation, administrative decisions, or long-standing formulas tied to inflation and the federal budget. When a bill is discussed or approved, it does not always mean immediate changes to your next check. Sometimes it sets the framework for future adjustments, new protections, or long-term funding rules. Recent discussions around policy proposals are mostly tied to broader budget negotiations and Social Security policy positions that continue to influence lawmakers today. Some provisions relate to protecting benefits from automatic cuts, adjusting how funds are allocated, or reinforcing payment schedules during times of economic pressure. This does not mean every senior suddenly receives a brand new bonus check, but it does mean stability and predictability are being actively discussed. One of the biggest concerns seniors have right now is payment dates. Over the past year, many people notice shifts in when deposits arrive. This is not always due to a new law. Often it happens because of weekends, federal holidays, or banking processing rules. Social Security follows a structured payment calendar based on birth dates and benefit type. The Social Security Administration typically issues payments on 4 Wednesdays each month, based on the beneficiary's birth date. For example, those born between the 1st and the 10th of the month receive payments on the 2nd Wednesday, while those born between the 11th and the 20th receive payments on the 3rd Wednesday. This structured approach ensures orderly distribution, but federal holidays can shift these dates by a day or two. Understanding this pattern can alleviate concerns when a deposit appears early or late. When holidays fall near scheduled payment days, deposits may arrive earlier or slightly later than expected, even though the amount stays the same. That is why recent announcements about new dates should be understood carefully. In most cases, these are calendar adjustments, not delays or reductions. Your benefit is still owed to you. It is not canceled and it is not lost. Knowing this can reduce anxiety and help you plan bills more calmly. Now, let's talk about amounts because this is where emotions run high. Many seniors are struggling with rising prices. Groceries, rent, insurance, and medical costs have all increased faster than many monthly checks. Any mention of new amounts raises hope, and understandably so. Cost of living adjustments are designed to help, but they often feel smaller than what real life demands. The cost of living adjustment is determined by the Consumer Price Index for urban wage earners and clerical workers, calculated by the Bureau of Labor Statistics. This index measures changes in the prices of goods and services, and the adjustment is intended to mirror inflation. However, many seniors feel that the adjustment does not fully capture their actual spending, particularly on healthcare, which tends to rise faster than general inflation. This disconnect is why some advocates push for using a different index, such as the Consumer Price Index for the elderly, which might more accurately reflect senior expenses. When lawmakers talk about protecting or approving measures related to Social Security funding, one goal is to avoid sudden benefit reductions in the future. Another is to keep cost of living adjustments intact. These adjustments are not gifts. They are corrections meant to maintain purchasing power. Even when amounts increase slightly, they often just help seniors stay in place rather than move ahead financially. Some proposals focus on ensuring that Social Security remains funded without reducing benefits for current retirees. This includes avoiding across-the-board cuts that could happen if funding gaps are ignored. While these measures do not always show up as immediate increases, they are still important because they protect what you already receive. Another area of concern is taxation. Many seniors worry about how much of their Social Security income is taxed. While there has been ongoing debate about reducing or eliminating taxes on Social Security benefits, no universal change has taken effect yet. Currently, Social Security benefits can be taxable if your combined income exceeds certain thresholds. Combined income includes your adjusted gross income, non-taxable interest, and half of your Social Security benefits. For individuals with combined income between $25,000 and $34,000, up to 50% of benefits may be taxable. Above $34,000, up to 85% may be taxable. These thresholds have not been adjusted for inflation in many years, which means more seniors are subject to taxation over time. Proposals to adjust or eliminate these thresholds are part of ongoing legislative debates. Understanding this helps seniors avoid confusion when hearing bold claims online. It is also important to mention supplemental security income and Social Security disability insurance recipients. These programs follow slightly different rules, but they are often affected by the same administrative decisions. Supplemental security income is a needs-based program for disabled adults and children, as well as seniors with limited income and resources, while Social Security disability insurance is based on work credits and provides benefits to those who can no longer work due to disability. Both programs have distinct rules, but are administered by the Social Security Administration. Payment schedules, eligibility reviews, and income limits can all change gradually through policy updates. If you receive supplemental security income or Social Security disability insurance, staying aware of notices from Social Security is critical even when changes seem small. Many people ask whether new bills mean you need to apply again or take action. In most cases, the answer is no. If you are already receiving benefits, changes usually happen automatically. However, this does not mean you should ignore your Social Security account or mail. Reviewing notices ensures you catch errors early and understand how changes apply specifically to you. As we move forward, we will talk about what seniors should realistically expect, how to avoid misinformation, and how to protect your benefits in the months ahead. Social Security is not disappearing, and it is not being secretly taken away. But it does require awareness and careful attention, especially during times of political change and economic uncertainty. This first part is about grounding ourselves in reality. No hype, no fear, just a clear understanding of how Social Security updates actually work. In the next part, we will go deeper into what seniors can do now, how to plan around these updates, and what lessons to carry forward to protect your income and peace of mind. Now that we have clearly explained what the recent announcements really mean and how Social Security updates usually work, it is time to focus on what matters most to you as a senior or future retiree. The most important question is not whether headlines sound dramatic, but how these changes affect your daily life, your monthly planning, and your long-term financial stability. One of the biggest mistakes many people make is reacting emotionally to online claims or social media posts. Words like approved, signed, or confirmed are often used without full context. A bill being approved or supported does not always translate into immediate cash increases. In reality, most Social Security changes take time. They move through administrative systems, budget schedules, and official notices before anything reaches your bank account. Understanding this process helps you stay calm and avoid disappointment or confusion. For seniors who rely on Social Security as their primary income, predictability is just as important as the dollar amount itself. Knowing when your payment arrives allows you to plan rent, utilities, groceries, and medical expenses. Even when dates shift slightly due to holidays or banking rules, the system remains structured and dependable. If a payment arrives earlier, it is not an extra payment. If it arrives later, it is not a loss. It is simply timing. Another key topic many seniors worry about is eligibility. Whenever new bills or policy discussions appear in the news, some people fear they may suddenly lose benefits or need to requalify. This is not how Social Security works for current beneficiaries. If you are already receiving retirement benefits, supplemental security income, or Social Security disability insurance, your eligibility does not disappear because of political changes. Reviews and updates follow strict rules, and beneficiaries are always notified in advance. This is why checking your Social Security mail and account information remains important. Notices are not meant to scare you, they are meant to inform you. Even if the language feels official or complicated, taking time to read them can prevent misunderstandings and protect your income. Another area that deserves attention is budgeting during uncertain times. Even small changes in benefit amounts or payment timing can affect monthly planning. Seniors who build a simple routine around their Social Security income often feel more in control. This means knowing your payment date, keeping a small buffer when possible, and prioritizing essential expenses first. While not everyone has extra savings, awareness alone can reduce stress. Healthcare costs continue to be one of the biggest pressures on seniors. Medicare premiums, prescription costs, and out-of-pocket expenses often rise faster than Social Security adjustments. While some policy discussions aim to protect seniors from extreme cost increases, it is still wise to review your healthcare coverage regularly. Making sure your plan fits your needs can stretch your benefit further without increasing income. It is also important to talk about misinformation. Unfortunately, seniors are often targeted by misleading claims that promise easy money or instant increases. Scammers know that financial stress makes people vulnerable. Common scams include phone calls claiming that your Social Security number has been suspended or that you are eligible for a large increase if you provide personal information. Remember, the Social Security Administration will never call you unexpectedly and demand immediate payment or sensitive details. No legitimate Social Security increase requires upfront fees, special sign-ups through private websites, or personal banking information shared over the phone. If someone claims otherwise, it is a red flag. Protecting your Social Security means protecting your identity. Keep your information secure, use official communication channels, and when in doubt, pause before acting. Social Security does not rush beneficiaries or threaten immediate loss of benefits without proper notice. As political conversations continue, one thing remains clear. Social Security is deeply rooted in the lives of millions of Americans. Lawmakers understand that sudden changes would cause widespread harm. That is why most adjustments are gradual, carefully measured, and publicly announced well in advance. Even when opinions differ, the core goal remains keeping the system stable for those who depend on it. For seniors watching these updates, the best approach is informed patience. Stay aware, but do not panic. Understand that not every bill creates instant change, and not every headline reflects your personal situation. Focus on what you can control, such as monitoring your payments, keeping your records organized, and planning ahead as best as possible. If you are approaching retirement, these discussions still matter to you. Decisions made today shape the future of the program. Understanding how Social Security evolves helps you make smarter choices about when to claim benefits and how to prepare financially. Education is a powerful tool, especially when planning for long-term security. As we come to the end of this discussion, take a moment to reflect on what you have learned. You now understand that new dates and amounts do not mean chaos. You know that discussions around Social Security bills are complex and take time to affect real payments. And most importantly, you know that staying informed is the strongest protection you have. Social Security is more than a check, it is a promise built over a lifetime of work. While the system may change, that promise remains a priority for millions of Americans and the leaders who shape policy. By staying calm, informed, and prepared, you can navigate updates with confidence instead of fear. Thank you for taking the time to learn. Information like this is meant to empower you, not overwhelm you. Keep paying attention, keep asking questions, and keep protecting your future. Your financial security matters, and understanding Social Security helps ensure that the benefits you earned continue to support you in the years ahead.